Good morning. Hope all is well with you. I have not come to you recently, and I thought I would reach out today to give you some assurance with respect to the banking nonsense concern that we've all seen over the last week. It started when um, Silicon Valley Bank experienced what's called a run, with depositors pulling out their cash and the bank not being able to sell, except at a great loss, bonds sufficient to make up the cash being withdrawn. Uh, Last week, Silicon Valley Bank's holding company declared bankruptcy. That started a little bit of a tremor in the banking world, and another bank, its name I believe was Silvergate, it was involved in crypto primarily, and it was located in New York. It also suffered a serious problem. And then a third bank, First Republic, which appeals to many high net worth individuals, also was suffering a bank run with deposits being withdrawn. They were rescued, if that's the word, with an infusion of $30 billion from a consortium of big banks, notwithstanding the fact that their stock fell over 50%. And then the pièce de résistance over the weekend was that a huge Swiss bank, Credit Suisse, was forced to sell itself by the Swiss government to another huge Swiss bank called UBS for effectively pennies on the dollar. It was sold, I think, for $3 billion on the weekend, and when the bank's value was measured at the close of business on Friday, it was worth many times that. Reminiscent, unfortunately, of our own local experience here with the sale of Wilmington Trust to M&T. So with all that as the background, the question is your money safe at TD, where we have your accounts housed? And the short answer is yes. You don't have to worry about that. Just a few rules to review with you, and then facts to apply to those rules to assure you that everything's in good order. The primary rule is that the FDIC insures all cash per depositor, per account, per category, per bank, in the amount of $250,000. So if you parse that, there are three different elements that you want to make sure that you're dealing with. The insurance is per depositor, per bank, per category. So the critical element of those three is the last, per category. What does that mean? What that means is that the FDIC will insure cash up to $250,000 in all different categories. So if there's an individual account, it's insured up to $250,000. If there's a joint account, it's insured up to $500,000, $250,000 per joint owner. Theoretically, if there were three joint owners, it would be $750,000. So if you and your spouse each have an individual account, each account for the cash in the account is insured up to $250,000. Then if you also have a joint account, that's a separate category, so that joint account is also insured up to $500,000. The third of the four categories I want to talk to you about, the first being joint, the first being individual, the second being joint, is IRAs. IRAs are a separate category. The cash in those accounts is also insured up to $250,000. And then fourthly, if your account has been titled in the name of a revocable trust, that account's cash is insured up to $250,000. The next point I want to make is that we're only talking about cash, truly cash. So we're not talking about money market funds. We're not talking about CDs. We're not talking about treasury notes. All those are separate items, and if you hold a store of value in those accounts, i.e. if you have $300,000 in a money market account, a money market mutual fund, that then is separately, it's a separate matter. You don't have to worry about that because the bank buys treasuries and other instruments to insure there. So you're fine. So I don't want you to worry about the headlines that you're reading about with respect to maybe the local banks, the community banks are under a lot of pressure and they're all going to go belly up and you're going to lose all your money. That's way, way, way over the top, and it's the kind of thing the media does these days, which is unfortunate in that it just fearmongers unduly. So you're fine. One last point is that Chip and I this morning have gone through and are in the process of going through every single account we have, finding the cash in the account, making sure that by category it's under $250,000. So if the world blew up, and it won't, you would have insurance to cover your loss. So that's a long explanation just to tell you that everything's in good shape. I don't want you to worry. Go on about your business. Now, don't forget, we have a wonderful, wonderful economic summit coming up. You are about to get an invitation to it. It's on April 25th. Mark your calendar. We have a phenomenal presenter from Emory University who's nationally recognized as one of the best thinkers and presenters in the country. He's coming to speak with us for your benefit. So please be on the lookout for that invite. I hope your brackets haven't been busted too badly over this weekend. Daughter Ann went to Princeton, so she's very, very happy with what's happened. It's the first time the Tigers have gotten to the Sweet 16 since 1967. That was back just after the Bill Bradley era. So anyway, some people are always happy, other people are sad. My Tar Heels are out of this tournament entirely. So I don't have much skin in the game, but I do have a little money invested in a pool. So hopefully you'll do well there, and look forward to seeing you soon. Everything's cool, everything's fine with respect to the assets we're managing for you. We are a fiduciary, don't forget that. We need to put your interests first at all times, and we do. Take care.